Hi guys, it's Wednesday the 26th of June 2019. I'm going to give you a technical analysis breakdown of some UK and US stocks. Let's get straight into it. Hi guys, it's Annie, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list. If you join my mailing list, you'll get priority access to my free training course that I'm creating for beginner traders. And you also get weekly emails of my latest videos and a spreadsheet that gives you the breakdown of my entries, my exits, my stop losses, and the reason behind some of my swing trades. Let's get straight into it. Okay, so before I go into the technical analysis breakdown, I wanted to show you an article that I saw which kind of encapsulates what I've been saying for quite some time. The market has been getting stimulated by I think the market is overextended right now, and it's due a recession. Not due a recession, but a recession's coming because the stock markets keep going up, but all the other indicators, everything's telling me that things should have crashed by now. And the other thing keeping it afloat is government intervention. So what I mean by that is that even the Fed's just announcing interest rate cuts, was enough to stimulate the market like a week or two ago, I think it was. But I said it in that last video. I can't remember what video it was, but I said that by the Fed saying that they're going to cut interest rates doesn't mean that they're actually going to do it. I'll believe them when they actually do it, because they use their influence as a stimulant for the market. If they suggest something, people will take it as gospel, and that could benefit the market. The market will go up just off the insinuation that they're going to do something, and they know that, so they use that to their advantage. But that can only work for so long until they actually do what they said they're going to do. So they've been insinuating that they're going to cut interest rates. And from this article, as you can see, it says markets bullying Federal Reserves on interest rate cuts. Institutional investors and basically people in the market are basically trying to strong arm the Fed into cutting interest rates, because they know that it will be the stimulus the market needs for a little bit more of a bull run. It's not antidote to the problems, but it's a band-aid, and it can help the markets rally up a little bit more. So that's why people in the market are really trying to bully the Fed, and these guys have influence. But the Fed are being very elusive. They're saying one thing. Some members of the Fed will say one thing, and others will say another. And these people are in the same committee, so how you're getting two different statements from two different people within the same committee. And I think they do this by purpose to cause confusion, because they don't really want to give away their intentions. But the problem is, people in the market are so optimistic, or I don't know whether it's optimistic or foolish, that because most of the market believe the Fed's going to cut interest rates, these interest rate cuts have been factored into the market already. So they've already accounted for the fact that interest rates might be cut in the next month. As you can see from this graph here, it says that interest rates could be cut. Market goes from pricing in pause to multiple Fed rate cuts. So they've already factored in multiple Fed rate cuts within June. So if this doesn't happen, we're in big trouble. That's why I keep saying we're in big trouble. Which is why, even though I'm in some long positions, at the dime of a hat, I'm ready to close them out if I think sentiment is going against us. Sentiment can trump technical analysis a lot of the times if it's so widespread. And this is why I need to give you this kind of information, because it will inform some of the trades I make. Because it doesn't matter what the charts say if the Fed, for example, doesn't cut interest rates, and then everyone gets scared and pulls out their money and stuff like that. So I just thought I'd give you a little bit of background information on this, and I think it's something that you guys should know, because the technical analysis is important, but it doesn't operate in a vacuum. You still need to understand the fundamentals of what's going on in the macro level of the market. I'll probably make another video about that actually, but I've rambled on enough. First things first, I'm going to go through the two positions I'm in already quickly. I'm going to go through ZAGG. ZAGG is not doing too well. If you follow me on Instagram, you'll see that I've been documenting my journey with these two positions. Now ZAGG, I'm down about £108 with ZAGG, but I haven't closed out my position yet, because my stop loss is at 625, and it's right now is at 650. And I say at 625 because it's below, just below the support line. Remember, on the weekly chart, I showed that this support line hasn't been broken ever. So even though price looks like it's selling off, I'm just gonna hold my position, and if it hits the support line and it hits my stop loss, then so be it. I'll lose 160, but I'm not gonna exit my trade early because I believe that there's still a chance that it could ricochet and bounce back up. I'm still hopeful. MACD and RSI doesn't look too good right now. It doesn't look good for me right now, but we'll see. Hopefully we'll see. We'll see what happens. I'm still hoping that there could be some sort of, as I said, it's flirted with this support line, and then it can make its way back up again tomorrow or even the next couple of days. I'm in no rush. As I said, my stop loss is at minus £160, which is at 625. If it breaks it and it hits it, and so be it. But as it stands, I'm down £108, but just have to wait and see. On the other end of the spectrum, I'm actually quite a bit on. I'm up £141 on ADNT, and as I said, I wanted it to break through this kind of invisible resistance, and it did. And I wanted it to, on the daily chart, I wanted it to break the 180-day simple moving average on the daily chart. It did that as well, so I'm happy with that, and I just see it rallying all the way to the top now here. So my exit point would be about $30, and if it gets to about $30, which is about here, if it gets to around this zone, and I exit my position, I can make maybe about £500. I mean about £400, I think, something like that. I'm up £140 right now, so I'm just waiting out and seeing how this plays out. But so far so good. It's looking good. It's climbing. So one position I'm in the green, one position I'm in the red. My running P&L is right. I'm about £13 up, so that's just how it goes sometimes. Hopefully ZAGG will turn, and if it doesn't, then so be it. Now let's get into the UK stocks. I'm covering 2 UK stocks today, and there's some method to my madness. I'm covering Boohoo and ASOS. The reason why I'm covering these two is that they're both in the same sector. They're actually competing with each other pretty much. They are both online retailers for clothing brands. They're online marketplace for clothing brands, and they're both doing really badly. The reason why I want to cover both of them is because they're in the same sector. Normally, they're quite correlated with each other. So if one's doing badly, most likely the other one's going to do badly as well, because they're in the same market, and that's exactly what's happening. I identified this a couple weeks ago as a potential short. Well, I didn't identify this, actually. Demola did. I remember he called this out, and I said that if it broke this kind of channel support line at 233, it would sell off, and that's exactly what it's doing now. I won't be surprised if it makes its way all the way back down to this old support line at 168. So there's still a lot of profit to be made. If you can short it all the way down to this, there's 30-40 pips, which is not too bad. Yeah, I can still see it selling off some more. Yeah, MACD, RSI, everything's telling me short right now. So yeah, I still think there's profits to be made by shorting Boohoo. On the weekly as well, yeah, it still looks like it's got more to go. MACD is turning down, and RSI is turning down. So yeah, and ASOS, similar story. It's ridiculous. I remember when I called out ASOS at the beginning of around January, I said it's going to make its way. It sold off because of bad earnings reports and lots of craziness going on with the company. But I thought, and I said that it was going to make its way back to £40, and it did. But I didn't realize it was going to sell off straight away after that. So it had this kind of little channel pattern. It came up, had a little channel pattern, then made its way back to £40, and ever since then it's just been selling off. And I don't see any end in sight, to be honest. ASOS is having a really terrible time. At this point, the way it's selling off, it looks like there must be more to do with the fundamentals than the technicals, because there's no real technical analysis that would have made me predict. I thought it was going to hit this line and then come back up, but it didn't. It just kept selling off. I wouldn't trade this now because I feel like we've missed most of the move. If you wanted to trade it with, you would have traded it earlier. And I think you don't know if it's going to make its way back down to this kind of old support line. But I think ASOS would be a better stock to trade, because right now on the daily chart the RSI is oversold, and I wouldn't want to short something that's oversold because it might start reversing at any point. But it's just an interesting one to look at because of how it's competing with Boohoo, and they're both selling off. So that means the online retail sector is having a lot of problems. So those were my 2 UK stocks. Now let's get into the US ones. STNG. I called this one out before, and lo and behold, it's done exactly what I said it would do. It's broken out for a little flag. As I said, it's broken out. It's had a green day today. I think there's going to be more. There's more to come from that. I think it's going to make its way all the way up to this line, as I said before. It broke out today, and I think there's more to come. So what I identified, well, I didn't identify it. What I saw was like there was I saw like a flag forming, and that's exactly what it's doing. It's broken out, and I can see it carry on rising. So there's about another 400 pips that you can make, and the risk right now would be 200 pips. So it would be 2-to-1 risk to reward, which is not too bad. I think it's pretty good. I'll definitely take that risk. Yeah. So once again, I just think it's going to carry on going up. There's no more analysis to it than that. It's made a little flag. It's broken out of the channel support. Made a little support and resistance, and then it's going to break out again to the upside. Next one is OC. OC, spoke about it yesterday with Xavier. He identified this, and straight away it's done what I said it would do. It's breaking out to the upside. What I need it to do now is to really push past this support line, this resistance line. It's all good and well hitting it, but we don't know if it's going to rebound now and just come back down again and do it one more time. We want it to break out. The minute it breaks out, then then you can actively take a long position, but you don't want to preempt it, because if you take a long position here, you never know, it might retrace back down to this resistance line, then break out the next time. So you want to see it break out above the resistance line, and then you could probably take a long position. Next one is Hertz. Hertz. Okay, so Hertz has already gapped down, so there's a big move that has already been lost, but I still think it's got more to fall, because it's got like a kind of resistance line here at I think it's $133. Was it $13? Let's say I think it's $13. And it's got here, so I can see this going back down to at least here, because at least here there's another resistance line here. I'll make this dotted. I can see it's coming to at least $14.16. So that would be 192 pips. So there's still a little bit of room for a sell off some more. I don't think it's going to retrace back much, because it's been consolidating below this 15-day exponential moving average. So I don't think it will retrace, snap back. I think it will just carry on going down. Let's go to the 4-hour chart. Yeah, so this is what I like to see. Let's see the MACD. Everything's telling me it's still got more to sell off. It's got it's broken down, kind of consolidated for a bit, and look at the 180-day simple moving average is above price and flat, but it's kind of tried to consolidate back up, and then sold off some more. So I wouldn't be surprised if tomorrow it just carries on selling off down. I'd say if you wanted to short, you can set your stop loss just above here, so you could you'd have like an 80 pip stop loss, and potentially make 200. So that's 3-to-1. Nice little ratio. And the final two, I'm doing another pair of stocks in the same industry, is good old JetBlue. JetBlue. If you watch my, if you go on my Twitter, or you see my last technical analysis report, I think I've covered this in my previous technical analysis report. I said that there was some sort of confluence going on here, where JetBlue would rise and then sell off, rise and then sell off, rise and then sell off. And this time it sold off, and where it sold off isn't coincidence. It would sell off to key Fibonacci levels. So here was like the 61 level, here is about the 38 level. So I wouldn't be surprised if now that it's reached here, it will start climbing again. I identify these with these little purple boxes. So yeah, I wouldn't be surprised if it started climbing again, because each time it sold off, it would rise at a sharper gradient and sell off at a sharper gradient. But I still think it's on the way up in the long term. Let's look at the weekly chart on this now. So good thing I looked at the weekly. That's why you look at all the different time frames. I kind of take back what I said before now. If price is above the 180 simple moving average, the 180 simple moving average is above price and it seems to be curving down. I would like to see price break above it to really show it's a bullish move, but the way the 180 simple moving average is looking, it's looking like it's acting as a resistance. I'd really want price to break above it. If it doesn't do that, then it could start selling off. But so far the motion on the weekly chart, I've seen it kind of curve upwards but ebbing and flowing. It would spend a couple of weeks going up, couple of weeks going down, couple of weeks going up, couple of weeks going down. And before it used to be 1, 2, 3, 4, 5, 6 weeks, 1, 2, 3, 4, and now the time that it goes up and down is getting shorter. So it took 2 weeks to get up and 2 weeks to go down. So it's getting even more aggressive in its motion. But I still think it could be going up in the long run. But we just need to see this price break up above the 180-day simple moving average on the weekly chart. But on the daily chart, 180-day simple moving average is below price. So I'm still inclined to think that price will carry on going up, because the pattern so far is, as shown, is just been consistent. So it'll be nice to see this pop up later. And then UAL, United Airlines, the competitors to JetBlue. JetBlue's doing better financially, but they're still competitors. On the weekly chart, it seems to be going nowhere fast, just been moving sideways for some time. MACD, RSI, all kind of moving sideways. I don't know, the MACD is kind of, and RSI are telling me two different things, so you have to be a bit wary of this. Because if you look here, the MACD is making like an upward gradient, RSI is making a downwards. So I'm not really sure what to make of this. Let me know in the comment section below what you make of this, because I'm not really sure what to make of this. If the RSI is going down and the MACD is going up, I don't know what that's really telling me. On the daily chart, yeah, this looks like a short to me. It's just been a horizontal channel pattern following suit. MACD looks like it's curving down, RSI looks like it's curving down, and yeah, just it'll be a good short. And even if it's wrong, you're not going to lose many pips. Just a nice little short here to the support line. And yeah, I think that's all of it. It's me, Any aka the Noctrader, signing out.